Bitcoin is sitting at 80 bands, and it just crossed its 200-day moving average. 11 out of the last 13 times it's done that, the bottom was in. Not necessarily, but Bitcoin is smelling something big going on in the macro markets right now. Trouble is brewing in the most important financial market in the world, the US Treasury system. Let me break it down. Treasury just doubled the amount of operational buybacks from $2 billion to $4 billion. And there are reports saying that Treasury is considering using its $1 trillion cash balance to do these buybacks. And despite all that stuff he was talking, Scott Bessent is starting to look a lot like Janet Yellen. And his former boss, Stanley Druckenmiller, has something to say about it. He clapped back at his former colleague in a Wall Street Journal op-ed saying, "Let the bond market speak." So what exactly is the bond market trying to tell us? That the US government is cooked. But I've got a crazy theory. Today I'm going to tell you why the market is 100% wrong about Scott Bessent and what he's doing right now. And at the same time, I'm also going to show you why $1 trillion isn't enough to cover up the hole that we have right now. Bitcoin is front running the 2008 financial crisis again, and I'm going to show you how. This is Dante Cook with Bitcoin Simply. Let's go. The bottom is in.
Bitcoin, I think, just from looking empirically at the charts, like really does need to recapture the 50-week moving average here, which is like, Mike said it's at 81, around 81. Mine says it's around 82, but either way, it's not that far from here. Something like 11 out of 13 times that Bitcoin crossed the 50-week moving average to the upside in a bear market, it signaled the bottom.
The bottom is in for a lot of reasons. And the main reason is because of the calamity and trouble going on in the US bond market. The bond market senses that Scott Bessent, for as tough as he is, well, at the end of the day, he might still just be a bond salesman. At least that's what Arthur Hayes thinks. This is the time where Bitcoin shines.
To own this debt anymore. That's a margin.
So the Fed should be raising rates. They just can't because the US is horribly in debt. The US Treasury, on the day we're recording, announced they're doubling the buybacks for somebody who's just got into Bitcoin in the last year or two, and they're still trying to understand macro. Simply put, what does debt buybacks mean for them?
It means more liquidity, more units of fiat chasing a finite amount of goods, Bitcoin being one of those goods, number go up. This is the road to 2008, the road to what created Bitcoin. And so that is what you're here for. This is the exact moment why you want to own Bitcoin, is when everyone realizes, oh, this US government bond is not worth anything. I can't buy anything real with it. I can't even trade this market because it's such a manipulated market. I need a real store of value. I need something that really is going to respond positively to a lot more dollars chasing scarce goods. That's Bitcoin. That was the story in 2009 when it was created. That's been the story ever since. Obviously, it ebbs and flows with the liquidity cycle. But if you want to talk about an acute moment where the world says the emperor has no clothes, the largest sovereign debt market in the world, if people are actually worried that yield curve control is coming, the price of Bitcoin is going to be in the hundreds of thousands very quickly.
This is the moment we've all been waiting for in Bitcoin. The moment when an asset would call the bluff of the entire financial system that is crumbling and collapsing underneath of the size of its debt and its promises that it can't pay and fulfill. And this is the spiciest time in macro theater that we've ever seen. Last week, the Treasury said they were going to increase the size of their operational interventions from $2 billion to $4 billion. And sources came out and leaked that they might use $1 trillion in their cash balance yesterday to cover these buybacks. And Bitcoin rallied to 80K on the news. But let me give you something that no one else is talking about. None of this makes sense. There's this line in the famous Lil Wayne song called 6'7", 6'7", that says, real G's move in silence like lasagna. And Scott Bessent is one of them real G's. I mean, this dude punched Elon Musk in the face. When he came into office, he was arguing for Senates to go back to gunfighting and fighting out their problems in real life. He also told the National Director of Housing, Bill Pulte, that I will kick your ass during a live meeting. Before he took his position as Treasury Secretary, he was one of the foremost traders and manipulators of foreign currencies in the world, and he learned from the best. He grew up in the school of George Soros and Stanley Druckenmiller. And if there's one thing that I know about these legendary traders, and I don't know much, is that these dudes don't forecast their trade. When they go out talking to the news, it's because they have a counter position or an opposite trade already in place. And you're going to be the bag holder. This is why the Druckenmiller article, Let the Bond Market Speak, seems like theater to me. He goes that this $4 billion Treasury buyback intervention increase is signaling that we're moving from liquidity, which is what the Treasury is supposed to provide, to outright yield suppression. Basically, he's saying there's nothing wrong with the Treasury market. It's actually functioning as it should, which is a rate limiter and accountability partner to the U.S. government fiscal spending problem. If rates are suppressed, then there's no limit to the amount of debt that the U.S. government can create. He's basically saying that QE is shifting from the Fed to the Treasury. His solution is simple. Let the bond market do what the bond market does and let them determine the price that the market is willing to pay for fiscal irresponsibility. And I agree with him on 100% of his points in the article. America's at 144% debt to GDP. And one of the things that he talks about is America's no longer going to be able to fund these entitlements. Social Security, Medicare, all the things that were promised as part of the American dream. Don't be fooled. It's unsustainable. But honestly, if Druckenmiller really wanted to say this to Scott Bessent, he would pick up the phone and call him. He would send his boy a text. It would never get out. It would never get leaked to the public, especially not like this. And there's a strong chance that this article was written by AI. If you plug the words into an AI reader, well, it says it was most likely written by AI. So what's the real thing going on behind the scenes? I think Citadel, Bessent, and Druckenmiller are actually trying to cause a short squeeze in bonds in the market. By coming out and putting out all of these things in place, like America's going to issue much larger buybacks and we're willing to intervene with $1 trillion of our own money. What that's going to do is it's going to send bond prices soaring, which is going to make all of these shorts cover their trades. TLT right now and long-term bonds are heavily shorted, almost historically so. And what this is going to do is it's going to cause a short-term squeeze where people are going to have to cover those shorts when the bond prices rip, and they're going to profit from it. But that doesn't solve the long-term structural problems, which is the United States government spends more than it can capture in taxes and more than it can deflate the value of its own currency without losing faith and trust in the bond markets globally. If one thing is true, when you look at these charts, especially like this one from the Fed, you can see that rates actually do follow deficits. They respond quickly. As deficits shrink, well, rates move with them. They respond almost instantly, sort of like Bitcoin. When it smells blood in the macro waters, Bitcoin is like the street shark of smelling blood in the global financial system. Last week, it had its largest Sigma move. And if you look back in history at all of these large Sigma moves, what you see is that Bitcoin never had a negative producing period from 3 months to 2 years after this event. This seems like a pretty good risk-adjusted place to buy Bitcoin. It's markets like these and moments like these that prove this chart from Strike to be true. Bitcoin makes these parabolic moves in a short period of time. Majority of the time, it trades sideways or even down. But in 10 to 20 days of the year, it produces the majority of its returns. This is where you want to be invested. And this is where you want to hold Bitcoin versus dollars, which is why we partner with Ledn. Ledn allows you to never sell your Bitcoin, borrow against your Bitcoin, and receive devaluing fiat currency. So as Bitcoin continues to rise in price or go up in value over time, the value of your Bitcoin is rising faster than the value of your loan. But Ledn allows you to do this responsibly. They only allow you to borrow up to 50% of the loan to value that you put into their platform, which is why they've never lost a single cent, sat, or dollar of customers' money. It's the responsible place where you can borrow against your Bitcoin with no capital gains and no tax sales. Start with Ledn to become your own bank and capitalize on the U.S. fiscal irresponsibility and the intervention bazooka that's coming. Be your own bank and remove your stuff from the financial system. Learn how to do this with a coach of the Bitcoin way. Members of their team will talk to you and tell you exactly how to structure your Bitcoin holdings, put it in a trust, make sure your family and your siblings and your spouse knows how to maintain and manage your Bitcoin, even if you pass away. All of these things are going to be critical, maybe not now, but in 5 years from now. Be prepared today for what could happen tomorrow. Get a coach from the Bitcoin way. They'll hook you up.
I think it's a useless speculative mechanism.
That goes to zero in your calculus?
No, years and years, decades and decades, it will dwindle away, I suspect, not with a bang, but a whimper.
And you think that because?
Because it's not a stable form of value. It just halved, didn't it, for no particular reason in a strong economy. So you can't depend on it in that way. And by the way, over the same time period, gold made a strong gain. Yes, it's down from the peak, but it's made a strong gain over that time period. People don't use it to make serious trades. They don't use it to buy their dinner and pay at the supermarket. So what the hell does it do? What it does is allows crooks to move money around without leaving a trace. And This is completely faith-based.
No, it represents proof of work. It represents proof of work. You're going to be totally wrong on Bitcoin, too? You're going to be wrong on everything you've covered.
Proof of unnecessary work shouldn't be worth a bucket of warm spit.
Unnecessary proof of work is worth less than a bucket of spit. It was a bucket of piss on Sunday and a bucket of spit today. We're always going to get clips like this where people are going to say that Bitcoin's going to go to zero. But that's not where the smart money is going. That's the doom and gloomers, the voices and talking heads that they put on TV. There's some strong short-term things that are impacting Bitcoin's price positively. But the fundamentals for a long-term structural trade are also in. Listen to what Bill Miller has to say about this. I think he knows what he's doing. His dad was one of the earliest investors in Amazon, and he's been a Bitcoin OG for a long time. And he thinks the fundamentals look pretty good.
I think crypto is just coming back after summer break, Scott. There's two things behind it, really. The AI trade is starting to lose a little bit of its luster as people become concerned around valuation and ROIs that may not be there on this huge amount of CapEx. So long-dated thinkers are shifting their focus elsewhere and now to crypto. And I think the real reason behind that shift, in addition to the concerns around valuation, are big liquidity interventions on behalf of governments around the globe in exchange to counteract big structural issues. So if you look what happened at the end of July, Japan intervened in conjunction with the U.S. to support the yen. And then last week, you had a big announcement where Treasury said they were going to double their purchases of long-dated fixed income. And if you think about what that represents, it's, again, policymakers trying to pretend that big structural imbalances that have been building up for long periods of time are not happening. You look at the impetus for Bitcoin, it was the global financial crisis, when policymakers locked arms and said, oh, this crazy structural stuff breaking isn't happening. So again, it's happening again. People are shifting their policies at the margin and extrapolating that, and Bitcoin investors are going, okay, where does this end? It probably ends with more intervention. So I think that's what kicked this big liquidation off last week. It was the biggest short liquidation in crypto in the past 5 years. And the fundamental case is as good as ever, Scott. If you look at the budget deficit this year in the United States at 1.8 trillion, the entire market cap of Bitcoin is smaller than the dollars that have to be invented from just this year's behavior alone. So there's a big structural demand here and a big runway, I think, ahead of us.
Capital is shifting. Bitcoin is the asset you want to own in macro theater. For one, it has a strong bottom because Bitcoin is such a religious, idealistic asset class that people aren't going to sell it no matter what because they don't believe in the current financial system. That represents a strong floor and a strong bottom to your asset class. It's also the most talked about, most discussed, and the most active and receptive to liquidity when interventions are taken in the market, meaning that there is no cap to the upside of Bitcoin when it starts to run. So you have the FOMO and the positive momentum on the top, but the floor on the bottom from the ideological believers in Bitcoin, the Bitcoin maximalists. There's a lot of strong reasons why. Bitcoin was made for moments like this, when the government has to respond and the government has to react. So despite what you think about Scott Bessent, whether the Treasury is actually in trouble or whether he's just manipulating the markets for a short-term trade, I think it's the latter. Because guys like this don't signal these things out into the market unless they already have a trade on and they're counter positioned. That's not how these elite traders work. But if you actually believe the theater that's going on, I want to hear your thoughts in the comments. And why, if you don't believe that Bitcoin's a strong asset, I want to understand why. Maybe it's me just thinking everything's theater these days, but regardless, Bitcoin is about that action, clearly, as we're at 80K. And I believe if we break 81, 82K, we can see 90K here really quickly. Arthur Hayes thinks we're going to see hundreds of thousands in Bitcoin pretty soon. I'm not that bullish, but I'm pretty bullish. And because I'm bullish, I try to buy Bitcoin every way that I can, not just through spot Bitcoin, but through Bitcoin mining with a partner like SAS Mining. You give them money, they get you a Bitcoin miner that they plug into the network. They mine Bitcoin with 100% free, clean, renewable energy, and they send sats directly to your wallet. Get started with one of the leaders in Bitcoin mining today, like SAS Mining. Subscribe to the channel if you already haven't. Understand what's theater, what's signal, and what's noise out there in the market. We break it down with personality, with fun, with quick hitting news and stories and lines that you won't get anywhere else. This is Simply Bitcoin. And this is Dante Cook with Bitcoin Simply. Happy stacking.